Bitcoin is blazing a trail to its all-time high. Will it peak this week? As we record this today on the 29th of February, leap year, the markets are out of control. It just feels like it was in 2021, like that everyone is talking about it again. Every New Year's Eve, I said, this year's the year I'm going to buy some Bitcoin, and just didn't do it. And even if I just stuck an arbitrary amount of money into it, it would have made a real difference today. But I keep getting alerts on my phone. It's, hit this number, hit this number, hit this number. How far is it going to go, Sam? Let's unravel it all as we reconnect today on the Uncharted Territory podcast.
Well, you're right, Dan. There's so much to unravel because we've had a bit of a hiatus, obviously being away, and like you said, we've been down while the markets have been pumping fully upwards, going the inverse correlation there. But yeah, lots to unpack, and really, I want to sort of look at the journey from where we were when the Bitcoin spot ETFs were approved. And that was on one of our live calls with our financial reset support group. So we experienced that live, didn't we, Dan? And back then, Bitcoin was around, trading, under 45,000. And today we are, we've hit 63K, almost hit 64K yesterday. So you can see in only, 5-6 weeks how much growth we've had. And it's a really great example of how quickly this market can move and why it takes people by surprise. I just want to, before I hand back, just give you an overview that, in those last 2 years down before 2024, I was often giving a lot of talks talking about the crypto market cap being, around $1 trillion. And it was at this bear market low, it was about around $800 billion. And today we're closing on 2.5 trillion. So you can see that's a 3x from there. And that's happened in a matter of months, So it's good to understand how quick these can move. And when we unpack it, why that's happening, because there's so much going on, Dan. So I don't know where you want me to kick off.
Well, yeah, I mean, on that point, just added some other figures to that. So those astonishing numbers, I know most of us are not big fans of BlackRock, but as we know, they launched one of their own Bitcoin ETF funds, and they had a record of $673 million inflow in a single day. So that's this huge volume, huge volumes. And that's just one of the funds. And of course, there's many now since the approval. And it was such an iconic moment, Sam. I think we'll look back in history. It was just so fortuitous that we're on this group call with our group and talking about the potential approval of this. And then boom, we get the message live, really in an iconic moment. And, for initially in the few days after that, the early weeks, there was this kind of uncertainty. Ethereum started rallying, and everyone was like, what's going on? It's and I think there's good reason for that. We can touch on some of those things and explain why things have played out the way they have. I think that'd be good to kind of cover, as well as some kind of prognosis of where this could go. And I've got some theories around some of the price predictions and what they're about. And we can touch on that. But I just wanted to start by saying this is a classic. You can look at the fear and greed index right now, pumping towards greed. All of a sudden, it's that point in the cycle where regular people, your taxi drivers, your people in the cafes are talking about Bitcoin. We've been talking about this for some time now. We've had some resistance to talking about this sort of stuff. And now people are coming to us again saying, well, it's time to get involved. What do I do? And it's slight frustration, but it's a classic psychological condition, is that people don't want it when it's not rallying. They want it when it's showing the potential to be this. I mean, it always had to have the potential to be this. We knew this rally was coming. When it was coming, we couldn't necessarily predict, but to me, it's just frustrating that, it's at the point where, the regular people start to buy in. This is where you get all the stories that, it drops down, they lose their capital. It's like, because you bought in on the top of the bull run, it's just classic psychology. But anyway, I'm going to put that aside. I'm just got that event out of the way. And let's pick up from the point of the ETF approval and why, initially, why was there, everyone was, a lot of people were expecting this initial surge, almost expecting what we're seeing now. Yeah. Why has it taken so long to?
So what we saw down there was we did see an initial surge. We were around that $45,000 mark, and we saw a surge up towards 50, almost hitting 50, 49. So a lot of people felt we're on our way. Now, again, there's always talk about this. The trend is a trend, but there's always manipulation going on. So what we had at 49K was a lot of people in the market thinking away we go. And what you get is a lot of people gambling that we're really away to the races and putting long positions in and leveraged long positions. So on top of just normal buying and selling of crypto assets, there are people gambling on where the market's going and borrowing liquidity off exchanges, market makers to do that. So the market is very good at, if people get overconfident, of liquidating those people, and the exchanges particularly. So much excitement building. Everyone's convinced we've gone to 49. We're away to races. We're, as you said, Dan, potentially onto the kind of run we're experiencing now. And what we happened there was a real flash crash that liquidated a lot of those people who got overconfident, oversure of where the market was going, coupled with a couple of other factors at the same time. Okay, we had GBTC, which was a Grayscale's Bitcoin Trust, which is a product that Grayscale had before they launched their Bitcoin spot ETF. So it was a slightly different product. I won't go into the technicalities of it, but essentially, because they've not launched their new spot ETF, they had the ability for their clients to exit the old position they were in and move over this better spot ETF trust. So what that led to in the short term was a lot of people who bought the GBTC, the Grayscale Bitcoin Trust, at a low price. It was their first opportunity to exit. They changed the rules around this trust because they launched a new spot ETF. So a lot of those people were taking profits. It was the first time they could, and that coincided with the launch of the spot ETFs. And at the same time, we also had the liquidators of the FTX scandal. You know, FTX collapsed in November 22, and a lot of funds owed to a lot of people. And again, it was interesting timing that the receivers decided to liquidate a lot of the Bitcoin positions that were held by FTX to repay people at the same time. So we had these cascading events happening at the same time that spot ETF started trading. So that caught a lot of people off guard, but the market often does that. It does what people least expect. And of course, there could be inside decisions and manipulation always in these factors, big players timing these things to suit their own narrative. So we did actually dip down to 39K down. A lot of people thought it's been a flop. You know, the ETFs, it's not working. But that's where it's really important to just get to the baseline level of what does all this extra inflow of demand mean? It means supply shock. Bitcoin is a limited supply. So in simple terms, yes, we had that fluctuation downwards for understandable reasons when we looked into it, but we knew with such inflows continuing that has to eat up the supply on the market, which is finite. And therefore that creates extra demand and we see price rises. So we had that kind of flush on 39K, trade sideways a little bit, but you saw, not long ago, a few weeks ago, suddenly we pushed up very rapidly to 50K. And that's a really interesting psychological level because it starts to hit the mainstream headlines, as you said there, Dan. A lot of it's a friendly number, psychological barrier, but also a friendly number. It's exciting to say in a headline, $50,000 Bitcoin rather than 48 or 49. So that happened. And then very rapidly, we've seen ourselves go up to, 53, 57, 58. And then really this week, we've seen ourselves and we spiked up to 60 or just under 64K yesterday. Okay, and bear in mind the all-time high is 69,000. And where we've come from in the bear market lows was 15,000. I always say this, if you bought Bitcoin when the Economist front cover announced it as it is over, crypto is the death of crypto, death of Bitcoin, you'd now obviously be up from 15,000 to over 60,000. So we're looking at a 4x on your investment. So that's where we are today. And it's really interesting because it got so overheated yesterday. It was quite a dramatic day because this is how quickly things can move when it gets going. That we're moving up through 60, smashed through 60K, almost hit 64, and then a couple of exchanges collapsed down. So Coinbase,
I was going to say, Coinbase, it got so intense.
Yes.
The Coinbase, was, supposedly the most, advanced service, took a right hit. I mean, not only did it take a hit in terms of the ability to execute orders, apparently some of the users they were logging in and seeing that their balances had gone to zero.
A lot of people had a brown trousers moment there, understandably. Don't personally use Coinbase, but and Coinbase is the most centralized all the exchanges, in bed as a custodian for most of the spot ETFs. Yep. So they're a big player. And again, from a conspiratorial view, who knows? But potentially some of these exchanges go down when they want to fiddle the trades and what's going on and make a little bit more cream off the top. Who knows? I'm not saying that did happen, but there's often that finger pointed exchanges that has happened in the past. So interesting, then we spiked down to 58 very quickly, a flash crash in that panic. I think Binance also had an outage, Qcoin. But very quickly, you've seen there, the inflows are so great, the demand is so great that we're back up to around 63K as we record today, Dan, on the 29th of Feb. And what's really happening is that a lot of those early purchases of the Bitcoin from the investment from the spot ETF funds was happening in an OTC manner, which means over the counter. So even the big exchanges have an over the counter service. exchange like Kraken for their huge clients will do deals over the counter. So it's not actually going on the order book. So it doesn't affect pricing in quite the same way. And what we're finding is that the OTC market is dried up. There's been so many inflows that there isn't much left on the over-the-counter market. Therefore, they're having to go for the Bitcoin that's on exchanges. So that's where we're seeing this real supply shock and why prices are going up so dramatically and so rapidly. Because, as you know, once that demand's there and most people have taken their Bitcoin off exchanges, are storing it in cold wallets, and we know that we're approaching the halving, which also means there's less Bitcoin coming into circulation. So all these factors together, we can see, this rapid rise, which is really interesting because we're approaching potentially breaking the all-time high down of 69,000, and that's never happened before in the previous bull run cycles before the halving event. We've got the halving event coming up in about 50 days. So it'd be very interesting. It looks like we're on the cards to break that cycle, and actually go really early through there, which never happened. So it'd be really interesting to see what happens. And the other interesting factor, and this ties into the problems of fiat currency we always want to talk about, is that actually Bitcoin has already hit its all-time high in 14, I think it's more now, but when I looked last week, 14 countries, okay? And that's not because, just demystify, that's not because there's more demand in those countries, whatever. That is the collapsing nature of the currencies, the fiat currencies. So we know that, if you have a Bitcoin, we talk about it in dollars, that's the reserve currency of the world. But if you looked at a Bitcoin chart in Japan or Argentina, Nigeria, Pakistan, Turkey, Egypt, it is at all-time high because the currencies are getting weaker and weaker. So that's another sign of the problems around the world. Huge problems and these are, these are big players. And we're talking about Japan here, Argentina, Pakistan, big players in the world, and their currencies are in real trouble. And that's where we're seeing that actually asset prices in comparison go through the roof. Okay, we always talk about, looking at pounds or dollars versus gold. It's not necessarily that gold's increased essentially. It's more that the fiat currency is devalued. So then, in essence, the same amount of gold 50 years ago would buy you the same amount of stuff today as it was, but the price in fiat currency is very different. Okay, so there's so much going on, Dan. That's where we are today. And interesting, you talked about it, and that's why markets are so interesting. That social, the social and the psychological aspects of it. That a lot more people, the news reports start to come out, and ironically, a lot more people will want Bitcoin when it goes past its all-time high, because they start to believe it's possible again. Okay, and they want that kind of feeling of, oh yes, it's going there, But what's interesting is up to this point, we haven't really seen the social metrics showing that what's called, the retail investor generally is in the market, and that's looking at, kind of the main YouTube channels on crypto. Their viewership, how many extra followers they're getting out. We really are not in a phase where retail is piling in. Now that may begin in earnest after all-time high, but I want to sort of reiterate how early to this cycle in terms of who's involved, and that most of this money pushing the market, even the altcoins, is institutional money.
That's right. Yeah.
Yeah, so a little summary of where we are today, Dan. But
yeah, that's really interesting. I suppose where I'd like to go next is the prognosis of where it goes from here, because I wonder whether there's a sentiment almost in the public, the retail investment sector, that they're thinking we've missed it. We've missed the shot. It's too late. But then you get price into people making price predictions of $200,000 of Bitcoin, and which is a few days ago is 4 times what the current price was at the time. And I just wonder whether that. And because we always see this during the bull runs, you get these price predictions that start to hype up where the price could go, almost to keep the energy going. And, the people who have prominent influence in this market want it to keep going, of course, because they've understood the dynamics. And if they can add more fuel to the fire, so to speak, through this, because it's supply and demand, exactly as you said. It's, the over-the-counter dried up. All that means is that people aren't willing to sell it. It doesn't mean there's less Bitcoin in the market. It just means that people aren't willing to sell at that price. And what we've got now is, as a result, these rapidly growing price points. But if people believe it's going to continue to accelerate and potentially hit 100,000, 200,000, they're going to still likely enter into the market on the hope that it does do that, because it's easy to look back, and I still look back and look at the $15,000 mark or whatever, or look further back when I first started looking at this darn thing in 2012 or 2011, when it was, and I was, every New Year's Eve, I said, this year's the year I'm going to buy some Bitcoin, and just didn't do it. And even if I just stuck an arbitrary amount of money into it, it would have made a real difference today. But I wonder if that's a factor, Sam, in terms of why people are holding off. The fear cycle. There's still an element of fear, even though the overall market is bullish and greed. Is there a greater fear in the retail market? I don't know. What do you think will be the tipping point? I'm curious to know your thoughts on that. And in the context of that, where do you think this will go? Within the cycle, you mentioned the halving. Again, historically, people have connected that with a bull run, a rapid growth in value. There's others who are skeptical about that direct connection or correlation. But where do you think things are going? And why do you think we haven't seen such a public retail inflow this time around?
Yeah, I think because the powers that be have done a great job of traumatizing the general public about crypto, Dan. Because my experience of mentioning the crypto word has become a C word like COVID. It's like it sends shivers down most people's spines, and there's almost fear. Oh my gosh, you're in crypto, because there still is that pervading feeling following the FTX collapse, which we've discussed in previous episodes, and and the news around that again never explains the full story of what's going on. Nothing, I always say this often, these kind of events, crypto is the innocent bystander that gets blamed for everything. Where in fact it's nothing to do with crypto, nothing to do with the tech, nothing to do with the assets at all. It's certain bad actors that exist in all. So you should feel equally as bad about the banking sector as you do about crypto, if not more. So there's still obviously trauma about that, and the kind of messaging in the mainstream has only recently pivoted since the spot ETFs have started, pushing Bitcoin to, the investors, particularly in the United States. But I think a lot of people also, feel like until it hits the mainstream media in a bigger way, and I think that will happen more at all-time high, that then that'll give them the confidence. So it takes a lot more time. There's a lag down. There's, and again, when you're in crypto and involved in it, you can kind of feel like, well, everyone knows about it. But actually, the indicators are in your own family, like you said, out in the streets, or, if you get in a taxi, whatever, are people talking about it? That's not my experience at this point. But I think your question of where it's going to go, that's why I always like to educate about and understand. This isn't just happening because people want Bitcoin suddenly. Okay, there is that spot ETF being launched, but this is understanding liquidity, global liquidity cycles, and where we are in these cycles. So what's so interesting about the 4-year cycle of Bitcoin and the crypto market is, and which ties in with the halving, I would argue, and I think a lot of people would also argue, that actually it might be a little bit of coincidence that it actually just dovetails with the 4-year business cycle and the global liquidity cycle. So often in the workshops, and of course I show those charts down that mirror where the markets are going, because it's just liquidity pumping into asset classes, into the pool of money that's going around. And when you look into this market properly, what you understand is there's huge funding coming from all angles into all sorts of altcoin projects, huge amounts of funding. So it's not merely it's time to buy Bitcoin and be buying. There is huge amounts of liquidity. There's huge investment sloshing around. So really, it's more about how that cycle plays out, how much liquidity keeps pumping in the market, rather than just what Bitcoin does, because it's so dependent on these liquidity cycles coming in. The dollar is on a downturn. I was talking about the relative strength index of the dollar. It's called the DXY index, and you'll see an inverse correlation. As Bitcoin's going up, that's going down. So people are moving out of fiat currency into the asset side of the equation. So that's all happening. So everything is teed up for a huge bull run. And typically, Dan, again, history doesn't necessarily repeat, but it often rhymes. What happens is you get the halving event and then a bull run for about a year to 18 months after that. So we're still actually in pre full blown bull run territory. What's never happened before, though, is for Bitcoin to run so rapidly, so quickly. So that could change the cycle. But that's where, if we've got a run, we've got the US elections, we've got this money printing going on. We're seeing money printing in Asia. We're seeing it all over the world. That's increasing liquidity. Therefore, everything is set up for great liquidity coming into this market from all angles. Now, potentially,
well, yes, Sam, you mentioned the election. Not only is greater liquidity coming in, these election events are going to create greater uncertainty in the marketplaces, and it could have an economic effect. And it's really short demonstrating the store of value function that Bitcoin has, and also a hedge against uncertainty and inflation. It's already been speculated that it would play that role, but that is playing out. So it's 49% of the world's population is this year going through an electoral cycle. So that potentially creates enormous political upheaval, and we've got the civil unrest in the farmers' population and various other kind of key kind of social movements bubbling away, and all of these things create uncertainty. And during periods of uncertainty, people look to move their assets into places where there's greater certainty. And you certainly do feel a greater deal of not only certainty with Bitcoin, but right now there's an opportunity for that asset base to grow in a way that you wouldn't experience elsewhere. And clearly that also comes with potential risks. The volatility in this market is still, prominent. You mentioned the dip to 58. It's like if you're in an airplane, you've ever experienced severe turbulence, sometimes it feels like the plane is about to drop out the sky. It's kind of like that jolt, and then it kind of goes back into stable growth again. But I think it's important to recognize that the electoral cycles could actually be all these factors lining up in a row to point in a certain direction. But does that give us greater confidence that it's likely to happen? Is there an outlier effect that it could have the opposite effect? Is there a chance that people's expectations won't be matched, or is expectation theory going to play out here, do you think?
Yeah, there's so much going on. I think it's interesting because we always give the potentiality that a bull run could be, invalidated by a black swan event. But when you look at all the black swan events, a lot of them over the long term are good for crypto, because you look at any banking issues, actually, where's the funds going? And really, to try and make clear to people that a lot of these funds flowing into crypto are institutional funds. These are the big players. And also, Dan, what's different is that all these spot ETFs, you've got a different market coming in buying crypto, who may be a little bit stronger as well in terms of their holding potential. So that's why we've seen such a steep rise, that if we had more retail in, we might have seen more dips on the way, a chart that looks a little bit more like that. So essentially, understanding that the potentiality of liquidity coming in the market, absolutely 150k, 200k Bitcoin is possible, but nobody knows. But it's more about staying with the trend, Dan. So we talk about the volatility, but when you understand that you're looking at the trend, the wave, the trend is that way very strongly, hugely strong, no question about it. It would take a hell of a lot to break that trend in the short term. It's more a question of how long the bull run goes on. Is it truncated? Does it run a lot quicker and shorter? But also, that's where people say, "Are you too late to the party?" Then the altcoins, haven't, they have made huge gains themselves. But when liquidity flows into altcoins, after it's flown into Bitcoin, that's when the altcoin market can go absolutely crazy. That's why a lot of people are positioned in those different assets, because the growth there, I always say, if Bitcoin goes to 200k from here, then we're looking at 3.5x from here. But if Bitcoin does that, a lot of strong altcoin projects will do 20, 30, 40, 50 x's potentially across the board, and some many more. I always say that big assets from the last bull run, Polygon and Cardano, both did 300 x's down in the last bull run. And these things, what's so hard for people to understand, they can happen in a matter of 5-6 months. The rapidity of the rise is extraordinary, because it doesn't take as much liquidity to move these assets, these altcoins with smaller market capitalization. So it's more about, being in the market, being aware of the potentiality, but also, having a view that this is not a fad, this is not a scam. This market is going to grow over a long term. That's why I say I can't exactly say when the bull market's going to end, or if it's going to be truncated, or how big it's going to get. But the only thing that's almost certain is that this market is going to grow exponentially over the next 5, 10, 20 years. So it's kind of like having that double-edged view where you could really benefit from this wave, but equally holding good assets. Those good assets are good assets for the next 5, 10, 15, 20 years. So you can have that peace of mind. So that's what we talk about a lot, don't we, Dan, on the workshops, in the course of building that thesis where you're in a really empowered state and you're not worried about what's going to happen in the market. You're curious and you're ready to react, but you're not not just crossing your fingers and hoping. And the more data you have, the more learning, the more research you've done, or better people you've spoken to, you have a better idea of why things are happening, and why the smart money are in the market. And I'll give you an example, Dan. So what's really driving a lot of the altcoin market is the AI sector. And again, we talked about in Mexico in the tech panel, didn't we? Good chats. AI is not evil per se. AI can be used for all purposes, good, bad, and ugly. You know, you can have amazing large language models for great purposes, could be really helpful. But AI is booming, and AI is really requiring GPU power, computing power is becoming the currency of this future world. Okay. And so a lot of the new AI cryptos that are launching or are already launched have huge funding because it's a need. It's a need now because the computing power required for AI is exponentially growing month on month. I haven't got the exact figures, but it was something like every month it requires 10 times more computing power than it did the month before, and that's growing exponentially. So that's where to give you a bit of more solid idea of there's huge funding coming into this area because it's not just a Bitcoin and a few other these are utility projects, tech projects looking to solve issues that are for the new world as it's growing. So there's an awful lot going on, and that's why it's worth, if you're in this market, just getting educated and getting a bit deeper into it.
100% agree. I mean, I'm already seeing signals of what you're talking about. I mean, I've got a long short list. Well, longish short list. Can't really call it short. Can't really call it a short list. But yeah, a long list of assets that I'm tracking. And I get daily notifications. Price has gone up by 3, 4, 5%, whatever. It's not ridiculous gains, but where else are you seeing those kind of daily percentile growth? And this is where I get excited because it's easy to get blindsided by the Bitcoin thing and feel a sense of FOMO that that you were looking at a point where the price was here or here and now it's here, and you're trying to weigh up, is it going to hit that 100? Is it going to keep going? Is it too late? But you're absolutely right, Sam. These other asset classes is within the same sector have huge potential, and this is where we've repeatedly made the comparison to the .com era, because right now the things you're talking about have real utility, and that's going to me, if you can find those projects that will have the long-term utility, as with any technological sector, you get the kind of first mover advantage. You get some of those early bright sparks that do some amazing things, and then other players come in and they learn from what the other people have done and they make it radically simpler or easier to use or more or better interfaces, whatnot. But either way, all of that is playing out now, and those early projects, some are entering into different stages of their maturity cycle, are now going to grow astronomically through this cycle, or potentially could. So it's easy to get caught up in the Bitcoin hype and think, I've missed it. Well, who knows? If the price predictions play out, and you're absolutely right, Sam, long term, it's still, and when we do our courses, you show like the liquidity charts, and when you talk about trillions, you're like, oh, that's most of the world's money. It's not. It's not. It's just. No, it's literally. It's a tiny drop in a ocean full of liquidity. Yeah. So there's still a lot more to come. And
on that note, Dan, it's just people might not be aware, but the Ethereum spot ETFs are in the pipeline.
That's right.
And I'd argue, I think they're going to come in Q2 this year. So again, you're seeing that narrative of greater demand coming for Ethereum, which is another deflationary asset. Has had 5 years of incredible growth. It launched at 17 cents and peaked at $5,000, and it's rapidly heading back towards it. It's $3,500 today, and it was $800 in the bear market at some point last year. So that's all rising. That will get huge traction. So there's so much going on in this space, and like I said, it's big players popping their money in this space, and I think we'll see spot ETFs moving to some of the bigger assets, potentially Solana, Chainlink in the future. That's we don't know that for certain, but the signs are there that a lot of these really strong, big blue chip assets will also have that kind of spot ETF approvals potentially down the line. So it's more to say that the market's not going anywhere, even should you get a scary shakeout or something change, a black swan event that shakes all markets. It's understanding that this is not just it's going to go up and it could all disappear tomorrow, because that's often what people do feel out there. They've been told that it's just there's nothing to it. It could just all disappear. And I think when you understand, the underlying technology, what's happening, and the sheer amount of funding coming into this space, Dan, because it's the baseline tech of the future, as I always say, for good, bad, and ugly purposes, the whole spectrum.
Yeah. I mean, that's why it's still a very exciting time. I mean, it's incredibly exciting. I mean, this is the most exciting time to be alive, I think, in every dimension, transformative period in history. But we've also got this, again, these confluences of cycles, but we've also got these new technologies that could transform the world, that could decentralize a lot of the issues that we've talked about in other places. And it really is a time, I know we always conclude at the same thing, Sam, but the point is, if you want to be part of this market, you want to be part of this cycle. When we started talking about this, the prices were much lower. The smart people, over 500 people have taken the Navigating the Digital Assets course with us. We've got a really great dedicated group of people working with us every month in the Navigating the Financial Reset group. We're looking at this with a fine-tooth comb. We're making full sense of the macro picture, the big picture, understanding the different tools and developments. Some of the tools that we're showcasing in month 1 are now using different tools in month 12, 13, wherever we're at. So the key is, if you're looking at us thinking, well, have I missed it? I need to figure out how to navigate this thing. Well, we literally, the clue is in the title, Navigating Digital Assets. We have a simple 3-part course that you can go through, self-study, go through the good, the bad, and the ugly, the basics, all the ecosystem, all the tools you need to get involved. We're making some developments to that course in the next few months to make it even easier for you to get started. And then if you want practical support with a group of like-minded people who are not just interested in this asset class, Sam, but they're actually concerned about the state of the world. Many of the people that have come to that is not only because they want to learn about how to move in the world of digital assets and other asset classes. In fact, we've looked at gold, we're looking at other things as well. It's really about creating financial independence at a time where the world is becoming increasingly centralized. So a lot of people have come and brought the concern of the outside world, and that's the reason why they're looking at this. They want to take full autonomy over their finances. It's not just about digital assets. So the Navigating the Financial Reset program is exactly what it does on the tin. There's great transformative period. How do we navigate that? Well, we're looking at it every single month, 2 sessions per month, group sessions, Q&As, bringing guest experts. So if you're on the periphery of this conversation, you want to come one step closer, then I recommend you go to weareelevate.org/reset. You can see both the options there that I've just talked about. And trust me, I think it's a decision that you won't regret. Learning about this in the first instance and educating yourself more deeply is vital, just so at least you understand it. But if you certainly want to take the steps and invest some of your capital into this, then these tools are not only practical, but they're also grounded in this wider, more holistic understanding of the nature of reality that we're in right now in all these different cycles that we're talking about, including the clown world, the lunacy that we have navigated the last few years. So,
well, just think, Dan, of people currently in Japan, Nigeria, Argentina, Pakistan, Turkey, Egypt, who have learned about getting some Bitcoin, hedging what's going on in their currency. How happy are they going to be about having taken action and learned that skill? So it is there's multifaceted, isn't it? There's the growth side, but there's also hedging the collapse of another system and the old system. So, and also taking more control, as we talked about, at least, having assets you control. And that's part of, I teach about crypto, that you do it properly and you actually control your asset directly,
yes.
And it's outside of the legacy system of third-party hands, self-custody. So all those aspects to learn, those pieces of the puzzle. And when you get those pieces of the puzzle, then you're going to be clearer why you might want to do it. And also, if you don't want to do it, that you do it correctly and you do it in an empowered state. And that transforms everyone's journey. So the people who are scared and worried about crypto are the ones who haven't, are in it without getting educated, or they're not sure what they've done. And that's not a good place to be. And, I always say it's better not to be if you really are in that state. But you can get educated, you can do that. And like you said, Dan, the people who spent the times in the bear market getting educated, they reap the rewards. But it's never too late to get that education, and there's huge growth in this market ahead. So there's so much work in getting educated and getting clear. And
definitely. The other warning sign, I think, Sam, this always plays out during the bull run, is that there is not only is there a rise in the prices, there's a rise in scams. People will manipulate people based upon that desire. And we've already had people in our group share different scams or different things that they've asked questions about. I sent a text, one of my friends the other day sent me a project, and I said, just very brief scan of this issue. You can see it's quite clearly a Ponzi scheme, and all of these things. Again, we talked about it. There are well-meaning people involved, don't really know what they're doing. I've got an old client of mine that got caught up in something and got himself in quite a bit of trouble because he just fell for the narratives that were coming with it. He made good money, but then lost it all because.
And who those prey on people who haven't got the base in education.
Absolutely.
With no judgment on them. Because it's a new tech, so a lot of people can be blindsided by the language and bamboozled and excited. But actually, once you've understood the basics, you'll know. Once you've got those basics, you absolutely know what's a real asset, what to do properly, and you don't fall for that. So again, it protects you from that way that being a victim of those situations. And again, always want to reiterate that crypto is not the criminal in those situations. There's a scammer using crypto as to run a Ponzi scheme. That's not crypto. So often I would say it's the innocent bystander. People say, I don't want to get into crypto because my friend lost all their money. Tell me the story. It wasn't crypto's fault. It was just a pure scam, and that can exist in any market. And of course, when you get a new market, there's always new people, fishing around to take advantage of people who are inexperienced.
Well, the beautiful thing is, Sam, within our membership group, we've had some people who've had some really amazing growth in their assets, whether it's through gold or other choices they've made in the digital space. But it's a really grounded set of results. People aren't out there going, get into the market, bull run, get rich. No one is taking that. You and I don't take that approach. And that's a reflection of the group that we've created. People aren't out there bragging about their returns, saying you got to do this, do that. People are being very grounded around all of this. They're taking the steps to develop financial independence, financial autonomy, removing assets from the centralized asset classes and finding ways to create financial independence, self-custody, decentralizing their finance, and growing their assets in the process. So when we set this out, people's main concern was about how do we protect our assets in these uncertain times. But now actually people are saying, well, how do we also grow our assets? And we're seeing both opportunities within the course of this emerging asset class. So, to recap, now is the time to really educate yourself. Yesterday was always the best time, but the next best time is today. So again, go to weareelevate.org/reset. That's weareelevate.org/reset. On that page, you'll see both the options we've outlined. Plus, there's a 90-minute conversation that Sam and I had around the financial reset. You can watch that in full as well as a bonus. So go weareelevate.org/reset, and we'd love to have you to join us. Our next group call is on the Wednesday next week at the time that we're recording this. That will be the 6th. And then we've got our next session. We've actually got 2 back-to-back sessions because of the fact that you mentioned that Sam and I have both had a period of extended sickness, and Sam's also had a period of downtime. So we've got 2 back-to-back sessions coming up. So a really great time to join our Navigating the Financial Reset session, the 6th and the 13th coming up. And then Navigating Digital Assets, like we said, is a self-study program. So it's 3 parts, bite-sized chunks that you can go through every single day to really give yourself that foundational knowledge, which will help you understand some of the jargon and the technical terms and some of the things we talk about on here. And of course, we've got this free podcast. We've got over 30 episodes now. You can go back and look through those. Some of those are timeless. Some of them are related to specific incidents or moments in history. But either way, there's a ton of resources out there for you to really start to learn. And ultimately, when you start taking those next steps, you become empowered and you can really start to take action towards the financial future that you want to create. So, Sam, great to be back. Great conversation as always. Let's watch this space. I'm very curious by the time this is published. I'm hoping to turn this around in the next couple of days. It'll be interesting to see what the price action looks like by the moment we record this and publish it. But do let us know your thoughts in the comments. It's great to be with you, and look forward to seeing you again soon on the Uncharted Territory podcast.